Um, okay, so Zach, first thing I'm going to ask you is just basically what is short term insurance?
Yeah, short-term insurance is, I believe what I was told is like when they first came out with these products years ago, because most people have coverage through their employer. There was, no healthcare marketplace, but you could get private insurance that was major medical. But they were designed for gaps in coverage in between, and like a new job, right? So you just need a temporary plan, maybe 1 to 4 months. But over the years, it's become a really good option for people that are, yeah, healthy, no major health conditions, and you could save quite a bit of money versus some other options out there, through like the healthcare marketplace. If you make too much money, short-term health insurance is a good private plan option for people that are healthy, make too much money and want a really good network, because most of them are nationwide PPO networks. Um, they're just structured a little different, versus marketplace plans where they'll cover any health condition. It doesn't matter. With short-term plans, they will screen you on the application, so they'll ask if you have any major health conditions. It's usually like heart attack, cancer, stroke, things like that. Are you due a surgery that you haven't gotten done? As long as you answer no to all those health questions, you can get on a short-term plan and get covered the next day with. We work with a few different carriers, but that's basically, a good affordable option for people. Sometimes too, with some carriers, you can get short-term plans that are just child only, where uh, if you just need to cover a child for a few months and when they're after they're born until they get on your health plan, you can get a child only short-term plan to cover them in case something happens.
Okay, so I know you mentioned something about the like there being health questions, were like about surgeries and about I think like they ask you a lot of it's like a series of questions, right? It's like 10 to 15 questions that they ask you, basically.
Yeah, it depends on the carrier. Most of them are the same. So it's like usually, heart attack, cancer, stroke, you have HIV or AIDS. Are you pregnant? Because if you're pregnant, they won't bring you on either. So it's this major stuff. And some carriers like United Healthcare, they'll even run a script check and see, what prescriptions you're taking, because it might flag them as something that they don't want to cover. So, but as long as in the height and weight chart as well. So if you are over a certain height and weight chart, then you could get a decline too on the application. But as long as you answer no to it's usually like 10 questions, then you can get coverage right away.
Okay, and then these are not that's like they don't ask you those questions for individual plans, right? This is only for short term.
Right. Yeah. If you go into the marketplace or, a plan through your employer that's offered, they don't ask health questions because they're considered major medical,
Mm-hmm.
and they cover any pre-existing condition. They will give you, free wellness visits. Is the most important thing about those plans is making sure you stay within a network. Now, some of the short-term plans, they do have different plan types depending on the carrier. Most of the plans they have what they call straight deductibles, so there's no copays. They don't give you free preventative care. But if you stay in the network, it's a really good network, you get discounted rates, and then that bill, let's say it's just a couple $100 for the doctor visit, that will apply toward whatever deductible you pick. Same if you went in for just a wellness visit and they don't cover it as free on the plan, they will just bill you, and that goes toward your deductible
Okay.
and out of.
So when it comes to those questions that they ask you, is there anything outside of those questions that you if do you have to disclose? Like, is there disclosure requirements that like anything like that? You don't have to disclose anything as long as it's not on those questions.
Right. Yeah. And let's say they run a script check and they might flag you or decline you, and you can contact the carrier directly to see why, because they won't let the agent know because of HIPAA laws.
Mm-hmm.
But you can get back on. Let's say you're on a drug that might be flagged as like something for mental health or something. Uh, they might think that's for schizophrenia or something. So you can request them to look into that. You can have your doctor send information to get approved. But as far as like showing any medical records or anything like that, you don't have to do anything like that. As long you just put in your basic information, who's all applying, right? Height and weight and all that stuff. Then you'll answer the health questions. So, like for Allstate, for example, I think there's 4 questions, and it's just the major conditions that they're looking for. And then as long as you don't need a surgery that was recommended, because that's when people they don't have insurance, they go in and find out what's wrong with them. Oh yeah, you need a back surgery. Well, if the doctor recommends that, you get on a short-term plan thinking you're going to get covered. They'll look at that and they'll decline the claim.
Wow. Okay.
So, but you don't have to submit any health records, nothing like that, unless you get declined for some reason. Then your doctor can send in information to the carrier and try to get you approved. But yeah, the only time that it would be a knockout is if you say yes to any of the questions.
Okay.
So when we're doing marketplace quotes, like during open enrollment, we're looking at the whole family, right? It could be a family of 4, and let's say one person's really unhealthy and one person's like, I'm healthy, I don't use the coverage a lot. You know, adding everybody to the plan could be real expensive, especially if they're not getting a tax credit. So the husband might decide, hey, what else do you got that's cheaper? And then they'll just get on a separate plan. And then the rest of the family stays on the marketplace plan.
Interesting. Okay. Um, all right. Well, then I'm gonna shift over to like just the agent focused questions right now. So maybe some questions that newer agents or any agents really might ask you or ask anybody about short term insurance. So the first one that I have is key differences between short term and ACA compliant. Like if you had to give me a bullet point list right off the dome, what would you go with?
Yeah. Yeah, usually when I start out the calls, I mean, right now, the only time people can get on the marketplace is if they've lost coverage within the last 60 days or they're going to lose their health plan. So if they haven't had any insurance for a while, like the only option available is short term, unless they run their own company and they can get on their own plan like that at any time of the year. So right then and there, I'll be like, hey, have you lost coverage recently? And let's just say they said yes. Okay, so great. You have both options as a broker. You can offer them, the marketplace plan. You can also offer them short-term insurance. And then from there, I kind of gauge like where they're at with, how many people are looking for coverage. Do you guys use your coverage a lot? Are you guys all healthy? I mean, when I ask that, I say, just it's usually the major health conditions. Like, does anybody have any major health concerns? And they'll usually say no, or I have high blood pressure or high cholesterol. But that right now, that's not a knockout question on short-term plans. So that's not like it's more common now. So it's not, they don't exclude people from that. And then from there, I will first look at marketplace plans just to see, where they're at income wise, because if they qualify for a family of 4, let's say they make 80,000, they could get a really big tax credit. So that could decrease their premiums quite a bit. And then you can give them a major medical where it'll cover anything, give them their preventative covered. So I'll pull that up, see what doctors and things are in, make sure they're in network with the company. Let's say it's Blue Cross. And okay, so that's an option. And I'll say, hey, we also have these other plans too. They're called short-term plans. They work a little different. You don't get your free preventative care. Some plans will give you copays, but they limit the copays. But they give you a really good network versus most of the marketplace plans are HMOs. So with an HMO, you have to, if you don't pick a primary doctor, they're going to assign you one. And then if you want to see a specialist or any other um, doctor in the network, you'll have to get the referral, which a lot of times people don't like. But once you get the referral, once you're good going forward, it's just with a PPO, you can move more freely. So some of my clients, when I pull up both options and I send them over, and um, it might make way more sense to go with the marketplace because they're getting a huge tax credit. It covers any health condition. It's similar to plans they've been on before with copays, out of pockets. Um, and the short term, some clients, if they're paying too much for the marketplace plan, that's when the short term becomes more attractive to people because they could save $500 or more a month for their, you can times that by 12. That's quite a bit in savings, right? And they get a good network. And so really, I kind of gauge it like that when I open up the call. Is I just try to figure out what's their financial situation as a whole for their family, because you know you might talk to someone that makes 300,000 a year, and all they care about is having a good network, and healthy. So, and they don't want to pay $2,000 a month for a marketplace plan, um, even though they can afford it. They're like, hey, what else do you have that's better network and better priced?
Okay, awesome. So as far as um, the amount of time that you can stay on a short-term plan, does that vary by carrier? Is it standard?
Yeah, so as of September of 2024, the previous Biden Harris administration put out a new law on short term, which decreased plans from 12 months down to, in most states, to 4 months, which has made it tough for us as brokers. And we've been through this before. They've done this throughout the years, changed the length of short term plans. Um, we expect that to be changed in the future, but we're not sure when, back to up to full year or longer. Because right now, like for example, in Illinois, there is no short-term plans available at all. They got rid of them once the law passed. In states like California, they don't even offer private insurance options. You have to go through, your employer or Covered California. But like a state like Texas, you could go for 12 months or up to 3 years of coverage with these short-term plans. Now, they only go 4 months at a time, and you have to switch them to another carrier, and they can only be on that carrier once a year, which makes it challenging right now to sell short-term. But there is other products that are similar to short-term that are private. They call them indemnity plans, and companies like United Healthcare and Philadelphia American offer these plans that go month to month as long as you want to keep them, but they don't have a deductible or out of pocket maximum on the similar to most health plans. So they just pay a cash benefit towards services when you use it. If the bill is, if it's more than what they pay toward the doctor visit, then you pay the difference. So really, like, now is a good time to offer the 4 month plans because it kind of gets them to the end of the year, um,
Okay.
until all the new plans are out for 2026 for open enrollment for the marketplace, and then by then we expect the short term plans to get switched back to up to a year or longer because your deductible, when you do the 4 month plan, the deductible will start over again once you start a new plan. And then also you're going to be asked those health questions again. So let's say in your third month you get diagnosed with a liver disorder. That's going to be a knockout question when you go to enroll, but so you can be mid-year stuck without health insurance, which makes it very difficult to sell the short-term plans in the middle of the year when they're 4 months long. Um, but now as a broker, it's not as bad because you can get them to the end of the year, and then you can get them on a major medical in January. Um,
Okay.
once that starts.
Yeah. Um, there was something I was gonna. Oh, you mentioned that they are short-term plans are no longer available in Illinois, and I remember when they made that change. So what happens? I'm an agent. Somebody in Illinois says that they lost their coverage for whatever reason. Instead of short-term options, let's say that they don't have a qualifying life event and they don't have insurance and they were kind of banking on short-term. What's the alternative for them?
Yeah, so the only other option that, I mean, there's a lot of plans out there, right? And our brokerage, I think we only specialize in maybe 3 or 4 different short-term carriers, and none of them, like Allstate, United Healthcare, and Pivot Health, they do not offer short-term plans in Illinois because of they just all pulled out of it. But they do have the indemnity products through United Healthcare, so they could get on those plans. So those just work different. There's no deductible. There's different plan levels too. So you get what you pay for. So if you get the cheapest plan with them, you get a really good network with United Health Choice PPO. But they're going to pay what they pay depending on the plan you pick. So if you get the cheapest plan, they might only pay $80 for your doctor visit. So if the doctor visit's $300 and you pay the difference, but anytime that you use the indemnity plan, they're going to pay what they pay based on the plan that you picked. And if it's if the bill is less than what they pay, they actually send you a check for the difference, but they're going to pay what they pay. And that's really the only other option. I mean, there's some other plans that are captive agents sell through. Um, can't I forgot the name of the company, but it's a United Healthcare product, but it's very hard to get on. It's very heavily underwritten. Um,
Okay.
U.S. Health, U.S. Health Advisors has a plan that you can get, but they're captive agents and they can only sell what they sell, and we can't sell it. But they ask a lot of health questions and run a lot of script check. So it's very hard to get on those private plans.
Right. Okay. So when it comes to short-term health, are you able to bundle like accident, critical illness, etc. with short-term?
Yes, you can, and that's and you most of the carrier, honestly, all of them have accident, critical illness riders, dental and vision. You can do it all in one with these carriers. Yeah, and then some of the short-term carriers, which is nice, is instead of doing month to month, you can do a pay in full if they get a policy for a year. Let's say Allstate, you can. Uh, they're like, I just you offer them the savings because could save up to 20% off the total cost by doing a one-time payment for the year.
Mm-hmm.
Um, that's just on the short-term side. Like if they get an accident, critical illness, they bill that month to month. But it's another way for clients to save money, and I think Pivot Health does that on 6-month plans. United used to do that, but I think they took it away once the laws passed. But
Okay. Um, Cool. So then, is there anything or any objections that clients have ever like? Has any client ever come to you and you've recommended the short term plans and they've been like, "Hey, I don't want to do that." Like, I guess what's the biggest pushback that you've gotten on trying to sell somebody a short term plan?
yeah, well, time wise, like especially now, it's tough, like in the middle of the year, to sell a 4-month plan and then you have to renew it. So you kind of keep going back and forth these clients like 3 times a year versus doing it once a year on a 12-month plan. So they don't like that inconvenience. They also sometimes the out of pockets are pretty high. So if you got a 5,000 deductible, the maximum out of pocket could be 12,500 versus a marketplace plan that might be 7,800 maximum out of pocket. Um, and then some of the plans don't have copays. So if you want to get a copay plan, they have them, but they cost quite a bit more per month. And to me, they're not really worth it because they limit the copays. I think they only give you 3 per person per term. So you're paying an extra $150 a month for 3 copays, and it just doesn't make sense to do that. You're just better off paying it toward your deductible.
Okay.
But yeah, I mean, it's not the plans aren't for everybody. I mean, especially that's why we asked the questions at the beginning because like if you're someone that uses your coverage a whole lot, or let's say you go to a chiropractor all the time, I mean, you're not going to want to get a short-term plan because it's just um, your health needs are going to be different, and you're going to want a major medical for that. If you're someone that's healthy, young, don't have any major pre-existing conditions, and makes too much money for a subsidy, those are the clients that are perfect for the short-term plan, or like gaps in between jobs where, hey, I'm starting a new position. I just lost my job. I don't want marketplace, but I'm going to have insurance in November 1st. So can I just get a plan for 2 or 3 months, and it works out really good for them.
Okay. And then if you like let's say that I got a plan for 2 months and that's what I signed up for, but turns out that that job isn't actually going to have me start for another 2 months. Is it possible to extend it, or do you have to get like re-quoted?
Yeah, you'd have to do it. Was the plan would start all over again, so you'd have to do another quote. The
Okay.
broker would have to do another quote and submit a whole new application. And then every time you submit an application, the carriers charge an application fee. It's something that the brokers cannot waive. We
Um,
don't get any part of it, but it's so sometimes like people are like, "Oh, can you waive that?" Or they're
right.
it's
Yeah, I
it's
had no
just
idea that they charged a fee for the applications. Interesting.
yeah, and then some carriers will charge an association fee where it's built into the price, and they bill it every month. And then once your short-term plan expires, the association fee keeps going, but then you have to cancel that too. So
Okay.
I've had, yeah,
Wow. Okay. Um, I think that pretty much covers all of my agent focused questions. So that's really awesome. Thank you for that. And I'm just going to kind of shift over to the client focused questions now, um, which you kind of answered some of these already. So I'll just kind of pick and choose a couple of these that I don't think we've answered yet. But when it comes to short term plans, if I get really sick or I get injured on a short term plan, is that going to be covered?
yeah. Once you're on the plan, you're covered. You're good. Just keep in mind that once the policy expires and you have to, let's say you had a 4 month plan and something happens and you go to re-enroll, they're not going to bring you on at that point. But when you're on the plan, you're covered, you're good, and you'll have access to really good networks because they're nationwide PPOs. So you can go see specialists without referrals. You can go to other hospitals that are, have really good services. And I actually yesterday had an instance with the marketplace plan because one of my customers in Wisconsin was on a limited, he lives in a rural area in Wisconsin, very limited network HMO. They wanted to send him to a bigger city for a surgery on his, I think a pinch, or yeah, something to do with his back. And they were having trouble finding a hospital that was in network. And this guy just needs to get surgery, right? With a short-term plan, you can go to any of the hospital or facilities that are in network. You can just go straight to them and get your procedure done while you're under the plan. You don't have to get the referrals and jump through the hoops like you would with an HMO.
Okay. Um, all right. So then I know you mentioned that if you want to extend it, you would have to put in another application and start it all over again. Let's say that I ended up starting the job a little bit earlier than expected. Is it possible to cancel my plan, or do you have to pay for those 2 months? You know, that.
No, you can cancel anytime, and then you're always paying a month ahead for health insurance. So they, let's say you signed up tomorrow, they're going to pull that premium with the application fee within a day or two. And then let's say you want to cancel mid-month, they would prorate refund a check to you either back to your card or in the mail, depending on the carrier. And then if you did a pay in full, I've had this happen where someone's paid a whole year and then they had to cancel like mid-year because they got a job with benefits. They still can get their money back. They just prorate it.
Okay. Well, that's good to know. I know you mentioned that with the PPO, you get a really good network and everything. as far as these plans and like the coverage, are things like prescriptions, mental health, maternity, are these often covered?
Well, I'll tell you, maternity is a no, because that would be considered a pre-existing condition. And then, so let's say you're on the plan and you become pregnant and you're going in for one of those visits to your doctor. They're not gonna cover that. They're gonna say that that's a pre-existing condition, so it won't be the best bet, especially going forward for that person to. They want to get on a major medical to cover those visits, the ultrasounds, the all the testing and the pregnancy. Some plans, I don't believe they cover mental health, but some of them do have telehealth. Um,
Okay.
and yeah, so and what was your other one? Sorry.
Oh, it was prescriptions, mental health, and maternity.
Yes, and someone will give you a discount card. I tell you off the bat, like they're not the best for prescriptions. Usually, you're better off just going to GoodRx to use their discount codes. But if you're on an expensive prescription, it's not going to be good either way if you going through them. But if you're on generics, they'll give you a discount card, and some of the plans will have copays. It just depends on the plan, because these carriers will have several different plan options that you can pick from. Um, the basic plans usually just, I'd say, cover people for catastrophic stuff, and then if you pay a little bit more, they'll give you some copays and things like that for doctor visits and prescriptions.
Okay. Um, let's see. And then I know that there was that list of questions that they ask you about, your current health and your weight and all that stuff. Um, are pre-existing conditions covered, not covered, or is it specific ones?
Yeah, so they do. Most of them will do a 5-year look back. So that's like within the last 5 years, have you had, any of these conditions, heart, cancer, stroke, Crohn's, liver, diabetes or pre-diabetic is a knockout question for some. And then, cancer, obviously. And then anything to do with like substance abuse or bipolar, schizophrenia, those right there, like MS, and then HIV or AIDS, as long as you say no, nothing in the last 5 years to those major conditions. Not like if you broke your leg 2 years ago, like that doesn't matter. But it's just the major health conditions.
Okay. Then I think the last question that I have is as far as carriers that you usually go with for short term, do you have any that you really recommend, or is it kind of just like a case by case?
Yeah, it does depend on state by state. So like I'm licensed in 25 states, so I kind of know now like which states are good for pricing versus others, like Texas. All states really tough because they're so expensive. It's not even worth bringing them up and showing them because it's so expensive. So we kind of look at either Pivot Health or United Healthcare, and then in other states it could be Allstate has better rates than United Healthcare, and they're all work very similar. They have both have really strong networks. The one thing that Pivot Health has done better than the other companies is they have three underwriting companies for them. So they once this law passed back in September, they came out with 3 4 month short-term plans. So you can get a plan up to a year with Pivot Health in most states. But after the fourth month, your deductible starts over again. So I've had some pushback on that because people don't want to have to pay their deductible 3 times possibly. But it is an option to get a good network, save money versus the marketplace, and then be covered up to a year at least. So I have some clients that are on with Pivot Health, but before the law passed, we were able to write people up to 3 years long with some carriers. So they would go
Wow.
12 months on the same plan, same deductible, and then be automatically renewed year two, year three, if they kept it that long. So we expect that law to get changed back by the Trump administration at some point. We just don't know when.
Okay. All right. Well, I think that is all the questions that I had. I mean, this was really awesome. Super, super Super nice. Thanks so much, Zach, for your time and for answering my thousand questions that I have about short
Yeah,
term.
these carriers are, I've been selling these plans for a long time. And, I tell people it's like, even with the marketplace plan, unless you're getting a free plan with a low out of pocket, there's going to be good and bad with every plan. It's just like, as a broker, you just need to like find out what's the best needs for the client, and then just say, hey, I got this, I got that. Like, which one of these sounds better for you? And then just kind of go from there.
Cool. And then, yeah, I guess just to sign off here, do you have any advice for anybody who is, trying to try their hand in selling short term insurance?
Yeah, I think if you're a broker, like, you don't want to have too many things, because like Ryan, who runs our agency, he's always presenting a lot of different products, and I try to keep it simple when my selling approach. I try not to offer too many products, because then it gets confusing for clients. So, but I would suggest having a few short-term carriers to work with, because marketplace plans, they're going to go up in price because they cover sick people. If someone has millions of dollars in claims, they only pay what they pay out of pocket, and then the insurance company eats the rest. So that's why those plans keep going up every year. So short term are going to be more tractable going forward for people. Sorry about that. For people looking for a great network, portability, right, and then, the coverage when they need it, they'll have it. And you also, when you sell short-term products or indemnity products and you bundle them, you make way more commission than you would with the marketplace insurance. The marketplace will pay you month to month, where a lot of the carriers on short term will advance you commissions. And then, so it's a nice way to get more money in your pocket, and then you're also offering your customers more options.
Okay. And then I know you mentioned the advanced commissions. For those advanced commissions, let's say they pay you for the 4 months or whatever. If the client ends up canceling before then, do they take that money back? Do they charge you back?
Yeah, you get a charge back. Now, if you've been in a business long enough and you have enough clients, like, you'll never notice your chargebacks, because your commissions outweigh anything that they're going to take away, right?
Okay.
But some people like getting paid as earned, and because they don't want. When I first started off, we were getting 12-month advances. This was about 10 years ago with a different company, and I mean, when those chargebacks hit, it really hurt, and it was hard to get out of that, because you had to sell a lot to get out of the hole you're in.
Right.
But yeah, and it depends on how your contract's set up. Like, you could do like 3-month advances, 6-month advances. I don't know if they go any higher than that anymore, but as long as you're active and you're selling these plans, people seem to keep them and like them, unless something comes up where they got something through another employer. So you don't see as many chargebacks on the short term as you would on certain products. Like, if you sell life insurance or something, people like to cancel that after a few months, and you can get hit with some massive chargebacks selling life insurance.
Right. Actually, I did think of another question just because we were talking about selling the short term. Is I know obviously individual and major medical is available on Health Sherpa and the marketplace and everything. How do you go about selling short term? Do you go direct to the carrier? Is there something else that you use that kind of puts quotes next to each other?
Yeah, I mean, it'd be nice if everything was combined with like all our carriers that we offer, but yeah, I have to go to the individual carriers' websites,
Okay.
and then send the quotes that way. And kind of, some of them are nice and user friendly, and some of them take a little longer to quote, because you have to add in more information, like date of birth and names and everything. So and you can also send. They also provide you with customizable links that you can send on each product, like Allstate does, where you can just send the dental plans or the accident and critical illness or the short term link, and they can look at the plans themselves. But yeah, you have to go in individual carriers, and then a lot of them now are doing e-signatures. So you can fill out most of the information, and then once you get done, they have to submit an e-signature, and they have to do that within a few days. Otherwise, you have to start over and do a whole new application.
Got it. Okay. Well, I think that's all the questions that I had now, finally. So thanks, Zach, for your time. I appreciate it. And I'm sure anybody that watches this video is going to very much appreciate it also.
Yeah, no problem. Thanks, Steph.
All right.